Hey, Robin. No, that's all right, Rob. How are you? That's the way. Yeah, I'm not sure how many people we're going to get this morning because originally it was at 7 o'clock this morning, but 'cause I was trying to tie in with all the people around the world. But yeah, it's very hard to find. So I put it to 9 for the US market because that's 7 o'clock tonight, 7 o'clock on Monday night. So there was a few said they were going to turn up for them, so we'll give them a few more minutes. But it's only the first one in the series, so I'm not expecting. I had two people turn up to the 7 one, which I did that anyway. So, but as I say, any more than two people is a gathering, so that's always good. So if oh no, that's okay. That's all right. I know you're not part of I don't think you're in a networking group at all, but I thought I went through my list. And I thought, oh, who maybe get some sort of value out of it, and I thought maybe there's something else you could look at here as well. I know you're obviously caring for your dad and that. Um, oh, there you go. Yeah, yeah. Well, it's only a very basic introduction, but if it's just you and I'll go a little bit more into depth into it, because I don't want to confuse people, obviously, um, because it's well, it's going to look confusing with all the lines going everywhere on the screen. Oh, sure. My phone. Oh, there we go. That's all right. It's morning. It's morning. I only look good. Probably put the filters on, so I don't know. Nah, not all. But no, I just blur everything in the background or put my marketing, but I put it in the wrong spot. So because you can see, yeah, yeah, yeah. So, but I've got to relocate the business name to down here somewhere, so my big head's not blocking it out all the time. So you get a you get a one on one, and we could probably have a little bit of a chat about what we're going to chat about anyway. So mm, yeah, well, I'm going to record the Zoom meeting. If we which I've just got to do on OBS at the. Oh, that's all right. No, that's fine. Don't need to mute. That's keep it open because it's just going to be something that we just post for people who couldn't attend to get people excited about it, and I'll edit anything out that's that doesn't matter. But it's just going to be a live feed anyway, so people can choose what they want to watch. But we'll give people till about sort of about 5 past 9, and then we'll get cracking. So, um, well, there's only you and I, so we can chat if you want. So, because, uh, yeah. Anyway, so how's your day going? Anyway, damn. Looking forward to the sunrise. Yep. Mm. Where are you? What part of Brisbane are you? You. Red Cloud. Ah, yep. Yeah. Mm. Yeah, it's changed a lot. I haven't been up there for about a year now, but even when I went up, I hadn't been up there for 10 years before then because you kind of don't go to Redcliffe unless you have to go to Redcliffe. There's no, but then no, that's right to Bribey Island and that sort of thing. Yeah, so but I went out to a dance thing out there, like a rock and roll dancing thing out there. They have out Breakaway. They did a big thing. It was beautiful, but I couldn't believe how much it had changed from. Um, mm, mm. Yeah, yeah. Well, that's right. No, well, I'm a Southside boy, so we don't cross the. The only reason we cross the bridge is to get to the Sunshine Coast, not to. Yeah, it's a big. Oh, okay. Yeah. Oh, Good move, at least. Be a bit warmer. So, oh, it's nuts. I had 3 years in Tasmania. Um, it was stunning. The place is absolutely gorgeous, but it can get very cold in winter. But the difference is that the houses are built for the cold, whereas in here we go, Donna's coming from the US now. So yeah, compared to Brisbane, whereas if it gets below 10 degrees here, you're freezing. So yeah, yes, oh, crazy, yeah. But yeah, but I kind of did like the seasons in Tassie. You know, you had that summer, which was 26, 27, 28 degrees, sometimes 30. But I remember going to Hobart in the middle of winter and Mount Wellington. It was snowing up the top and 30 degrees in Hobart. It was just amazing. So you could drive to the top and see the snow in Christmas, which is unusual in Australia, obviously. But yeah, I'll just send Donna a message, just tell her to unmute her mic. So, because then we might be able to get going. Um, so, oh, hi Donna, how are you? I was just good, good. I was just about to message you and see if you're going to unmute your mic. Donna, this is Robin. Robin's from Redcliffe, Australia. Um, that's all right. That's all right. So Donna's from Chicago in the US. So yeah. So uh, I'll never say never. So all right. Just have a look at the time. So it's 9:05. So we're going to get going. We had a few people on the earlier one this morning come in eventually, but so this is our first of the series. We're going to do. And if you don't mind, just going to have a quick little prayer just before we start, and then we'll just move straight into it. So, Father Lord, thank you for bringing where there's two or more people together as the church. Give us the grace and guidance just to so we can share the right information with each other and just have an amazingly blessed day. In the name of Jesus Christ, Amen. So, great. All right. So we're going to get cracking into it. So what I thought I'd do is just a little introduction to cryptocurrency. The concept of cryptocurrency is no different to trading forex or to trading stocks or shares through the Dow Jones or anything like that. One of the advantages of cryptocurrency is the entry level into cryptocurrency is a lot lower. You can trade for as little as $20, and also the cost of trading compared to stocks. Say if you're doing a stock transfer on the US stock market or the ASX, Australian Stock Exchange, you're generally looking at $5 per transaction, which is a lot of money if you're only investing $20. You know, it's 25%. Whereas with cryptocurrency, you're looking at around about 0.02% of whatever you transfer. So cryptocurrency became known as the people's currency. So people in developing countries like Africa, it's huge over there. It's because it allows them the opportunity to maybe one day, bring themselves out of poverty. And for those of you who followed me with Art for Africa that we're doing, and I'm not sure, Robin, which you know much about it, but Donna probably knows a bit about it. Is I'm very passionate about ministry work in Africa and helping people with a help up rather than a handout over in Africa, and trying to get their artwork and digitally put it onto cryptocurrency through what's called NFT, which is non-fungible tokens, which I won't go into too much detail today because that's a 2-hour session in itself. So we'll just stick to the crypto at the moment. So what we're going to go through today is just a really broad introduction on how it works, and we will go into a little bit of. So I'm going to pull up some graphs. It's actual live trading as well, which is happening at the moment. And it's going to look, when I pull up that, you're going to look at it and go, oh my gosh, there's just lines everywhere, and what does it all mean? And I'll try and break it down for you to keep it as simple as possible, but it's not quite as scary as it looks either. So it was when I first started, don't worry. So intro to crypto by me. As I said, just so you know, guys, this is not financial advice. I'm not a financial advisor. I can't give you financial advice. If you do decide to go ahead and do anything with it, happy to chat as a friend, as a colleague, as a business owner. But you've got to do your own research all the time whenever you do this, because it is your money that you're investing. I don't take any money for this or anything like that. So this is just purely because I really like helping people out. So what are we going to learn? We're just going to learn the basics of candlesticks, and which I'll go into more details. What the meaning of RSI, MFI, and moving averages. Again, don't worry about the acronyms. I'll explain what they are as we go. The difference between future trading and it should be spot trading, not sport. Of course, the spell checker wouldn't pick that up. So what it means to leverage money. So that's borrowing against. Oh, hey Donna, we got your picture there. Leveraging money. So what it means to borrow against trading, which that becomes obviously a little bit more riskier. Some examples of trading, and a little bit of a time to do questions at the end, and anything you want to ask. So if everyone's happy, if we're right to move on and go from there. All right, so I'm just going to. This is where you go. Oh my gosh, look at that. That's a picture of an exchange. An exchange is basically a place where you can go on and do your trading. So it allows you to buy stocks, sell stocks, and it gives you a bunch of figures here and that, which we won't go into too much detail just yet. A little bit more later. Yep. Oh, sorry. No, I'm glad you. All right, let's go now. How's that? Now I can't see you guys. Oh, now I can. Yeah, there we go. Sorry, I'll start again. This is an introduction to crypto. I wonder why you were looking at me strange when I said sport was spelt wrong. There you go. That's a good lesson to learn there. Hey. All right. So that's the intro. I'll just go through again what you're going to learn. The basics of candlesticks, the meaning of RSI, MFI, and moving averages. The difference between future and spot trading. As I said, not sport trading. Leveraging money, and some examples of trading in question time. So this is an example of what an exchange looks like, and we'll go into more detail a little bit later. And as I said, it can be a bit scary as there's lines going everywhere and all that sort of thing. But this is where you purchase and sell stocks and shares at the end of the day, or crypto. And it works exactly the same whether you're trading Tesla shares or whether you're trading AUD dollars to USD dollars or vice versa. The formulas that people use to trade are exactly the same. And now they're not written in concrete. Well, the formulas are written in concrete. Doesn't mean they work 100% of the time, because if they did, everyone would be wealthy, obviously. But if you do stick by a set of rules, the win to loss ratio is much higher. But yeah, the hard part is sticking to the rules, because emotions become involved very, very quickly when you're doing this. Because you've got money on the line and you're seeing money go down. You've got to have those, I suppose, that fortitude to hang on and say, well, I've done my research, and there is a possibility I will lose this trade, and not get emotionally hung up on it. Or what they call FOMO, or fear of missing out, is you might see, for example, you see there that there's a large drop quickly. So you might decide to sell all your stock straight away and get rid of it because you're freaking out, or you might even see all this. But what you don't see is this next part of the graph where it actually went up here, because our formula told us that's where it was going to go, but we got all panicked on it. So that's a good example. Just to give you a breakdown of how it is this here, these little charts here, that's all what they call candlesticks. All the little lines you'll see are called moving averages. And this is all more detailed analysis, which we'll go into. Here we're going to see what trades are happening at the time and what the actual market trades are happening. This is only on FTX, which is a particular exchange, which is about the second biggest in the world, behind Coinbase. So that they're really the guys. You want to make sure if you're using an exchange that you're using somebody who's in that top three, because they have to obviously support that amount of funds. If they don't and they go broke, you lose your money. So that's very, very important. So we'll move on from that. So I'm going to give you an example of basic candlesticks on how they work. So this is what it's called, a candlestick, because obviously it has a wick and a bottom. So if you look at here, we have a green one and a red one. And a simple way to look at it is green is go, red is stop. That green means it's a growth one, you can see here. Red means it's what we basically call that a bull, and we call that a bear, essentially. That's a really good way to remember it. Now we have a high and a low. So these are are called wicks. So you can see here on this one here, we have it actually closed for this period at say just over 22,000, but actually reached somewhere in that period, which is over a day. It got to 23,000, but then pulled back to that level, and it opened at this level here. But sometime during the day, it went down to that level. So you can see there's a $2,000 swing in one day. And this is the exciting thing about crypto compared to probably stocks and stock markets and also FX, which is currency trading, is you don't tend to get those swings in those. They're a lot less volatile. It's good and bad. It means money can be made easier, but it can be lost. But having said that, is you can make money in a growing market and a losing market. And they're what's called you do basically one for a profit gain and one for a loss. So you can actually buy for a loss, which I'll show how that works later on as we go. And you can see there's some indicators on there as well, which again I'll go into a little bit more detail. Now, if you've got any questions, just pop your hand up anytime or take yourselves off mute, rather than just let me go. If I'm talking too fast as well, which I tend to do sometimes, please just say, hey, Adrian, can you slow down for me? Or pop it on the chat screen or something like that, which I have up at the moment. So just give me a thumbs up if you heard that all right, and everything's cool. Awesome, thank you. Okay, so we're going to go, what is RSI? Okay, RSI is not repetitive strain injury, as people think. It stands for Relative Strength Index. And the Relative Strength Index, or the RSI, is one of the most common indicators in technical analysis. Basically, in short, in traditional stocks and cryptocurrencies, and in FX trading, like monetary ones, and in particular stocks like Bitcoin, Ethereum, and we'll go into some of the other bigger stocks later. It utilizes data and it basically makes you an informed decision of where to buy. It is only one of the indicators out of all of them we use. So you can see here this little line here. So what it means is it runs between, the buy zone is in this between 30 period and the 70 period. When it is below this little dotted line, it's what's called overbought. So it means too much has probably been bought already. When it goes here, it's oversold. So usually what happens is the price comes down or the price goes up. So as long as that makes sense. So again, it's got RSI 14, so that's actually over 14 periods of whatever time you select. And you can select time periods anywhere from 1 minute up to 1 week, depending on what your goal in trading is. The shorter the trading window, obviously that's what's called scalping. So it's you're going in there for quick little profits. The longer is for long-term investors. If you're looking for a daily or weekly trade, you might be looking for your retirement or a 5-year investment. So hopefully, if that makes sense with the RSI? We'll go through it again in more details when I actually pull up some live trading for you. What is the MFI? No, this is called, basically it's the money flow in index. So it's when money actually flows into it. So you can see here, generally, even though these are red bars, this is actually the volume that's coming through, the number of dollars that's getting sold. Even though these are red, there's a lot of money going in. So it means people are selling short. So they're selling for an actual loss here. They're expecting the market to go down. And you can see here when they pulled out, there's not much money coming in. This is another great indicator of when we're looking for a buy or a sell period, so that we know when we do it. Which again, when we put the two together, which is the RSI and the MFI, you'll see how that works. Now, another key indicator is what we call moving average. A moving average is basically a price of a stock over a period of time. So we use a number of different ones over a shorter period and over a longer period to gain a what would be called like a pattern. So over here you can see here we've got MA, which means moving averages. We've got a 200 period, a 5 period, a 15, and a 50, and a 100. So if we look at the 200 period, it's over a 1 day for Bitcoin on the US dollar, which is traditionally how we trade US dollar. Some of the exchanges in Australia still use Australian dollars, but I always like to trade in US dollars because that's the way the world talks, and there's no point trying to talk in Australian dollars because you've got to do conversions and all that rubbish. So so you have a look at here. We've got the red line. Now the 200 is not even appearing on this little photo, the copy, but it will on the live chart that I will show you. But you can see the red, which is a 5, and the green, which is a 15. So that's the most recent. So this red line here is the 5-day period. And it's only from a few days ago. So you can see here, over these last few days, well, what would we see? If we were looking for what sort of market we've got, you can see we've got a trending up market, whereas we've come down off a really, really bad market, which everyone might remember from November when everything crashed. So we actually got a nice ascending line going up. So we've moved all the way from bottoming out down around about the 17.5, and we're up. Actually, last night it hit around about the 24,000 mark, and that's over a period of that many days. So it's not a lot of days to have, nearly a 40 or 50% return on your investment if you knew when to buy. And I'll show you why it was a great time to buy at that period. So that's basically how the moving averages work. What we look for here is crosses. Here is you see where the red crosses the green. So that's the 5 period crossing the 15. We can see spikes starting to happen straight away. And again, when it crosses the 50, which is the blue one, we see another spike happening. Each time that happens, it just shows, it's just a trend line to show. It's another one of the tools we use when we move in with the RSI and the MFI together. So now we've got 4 tools that we use to do it. And there is a whole heap others, but these are the basic ones to use as well. Now leveraging. So what is leveraging? Well, a leverage trade is one in which is also known as a margin trade or a margin finance. It allows you to open a position with the exchange or a broker, or however you want to do it, with a lot less money down. So for example, say you had $20 and you had the ability to leverage it 20 times, it means you've actually got $400 to play with. Play is probably not a great word, but $400 to use to invest. Now, and I'll show you why. As I said, I'll show you some live examples, because there's a lot of danger in this as well, of losing it, because you get set what's called a liquidation point. If a stock drops below that amount, you lose the money. So it's not something you'd go playing around with. But having said that, to leverage small amounts of money, or say a 5x, so if you've got $20 and you actually invest $100, and then you see a good return on your investment, you're getting the profits of the $100, not on the $20. Does that all make sense? Does that just give me a thumbs up if it makes sense? It's hard to do yours, Donna, because you're a normal pitcher. So, so I'll show you some live examples of that coming up. So you have to excuse my voice. My head's a bit clogged up from this silly cold that's going around. Now the MACD, I'm not going to go too much into this, but it's a moving averages and convergence divergence. Sounds really, really scary when you put it like that, but it allows you to put all of this information together, and then it's just another little key indicator we use to show you how, just again to give you another indicator of when to invest and when not to invest. So I'll go into a little bit more detail on that. So we're going to jump right into some trading, and probably it's a good chance to probably take yourselves off mute, and then you can ask some questions as we go into the trading. So I'll just switch over to a live trading panel. So can you guys all see that all right? All right, so, great, awesome. All right, so this is, I'm just going to put this in full screen. All right, so it's full screen at the moment. So this is my live account trading, one of my live accounts trading. You see I've got a number of accounts open up here, which I use. So this at the moment is what's called Matic, but we'll slip onto one that everyone knows, which will be, we will go to Bitcoin. Because obviously everyone knows Bitcoin. It's kind of what people understand. So again, you can see all those things we talked about. We've got our MFI here. We've got our RSI here. We've got our volume of trade at the moment. The period is over a 1 minute, so it's the smallest one that we can do. So it's a 1 minute trading pattern. So you can see how quickly things move. And you can see the candles we're using there. Obviously over here you can see the trades as they're happening. This is actually what's called an order book, and these are all previously placed orders at certain price points, and you can see they're just moving like crazy. So in that 1 minute period there, you can see that $2 million went through. But if we go back here where we had a bit of a crash, you can see nearly 3.2 million went through in 1 minute. This is just on FTX, and you got to understand there's probably 100 exchanges in the world. So the actual total, what they call market cap of cryptocurrency at the moment is $1 trillion. They're expecting within 5 years for it to be $8 trillion. So you can imagine that's an 8 times what. And if you compare that to, say, the U.S. stock market is running at about 23 trillion. So it's catching up to that fairly quickly. So it's becoming well known. So you can see here we've just seen Wise Live. We've seen a big drop straight away, and but we're seeing that after massive growth as well. As you do when you get growth, you tend to get what's called a pullback to a new high essentially. And we'll have a look at more details. We'll zoom in and have a look at it a bit more. And I'll drop it out to a bigger time frame of about 5 minutes. So again, this is still short-term trading at 5 minutes. So you're looking at stuff that we want to trade over the next, and want to be in and out within an hour or two of trading this, if we're doing this. So again, I'm going to zoom right in. And just to give you a bit of an example of how, actually I'll go out to 15 because it gives you a really good example of how the last couple of days have gone. Alright, so you can see here over the 15 minute, the green and the red, these are the candles that you can see. So you can see here we had it running very, very nicely, and all of a sudden we've lifted here from 23.2 and pushed all the way up to 24.2. So that's $1,000 in a period of about a day and a half. So it's quite a substantial growth, as you can see. Now, as we talked about with the factors we're looking at, we would have took this trade, and I'll zoom right in again, and I'll explain why. So this is when it started to react, and what you're looking for is, so you've got a high and then a low. The next high is higher, next low is higher than the low, and then you go high, low. This is basically saying, so you can see a little bit of a correction here, and then boom, we just keep going, high and a little lower, little high, low, high, a little correction, and now we've got this flattening, and then this curve is starting to go down. So you expect us to come down around that 23.5, and depending, market forces change. Obviously, if the Ukraine gets blown up by a nuclear weapon, well, the market will just crash and we're all broke anyway. Or the US has a massive impact on these markets. Things like interest rate rises. Every month we get affected heavily by that, and also talks of a recession within the US and global markets as well spook the market sometimes. So, but as I said, where I took a trade, looked at taking a trade here, was, if we can zoom in, you can see here we've got both our MFI and our RSI at absolute low points. They're below, so they're underbought at this level here. The money's low, and you say, so this would have been my first trade looking at here. The next thing I'm looking for is this yellow line and this red line, and this is what's called the MACD. Once they cross, if we're still in this zone here for trading, this is when we'd be taking it. And the next one to validate that trade is the crossover of the red line here, which is the 5 and the 20. If you can get all three of those factors within a 5 or 10 minute period, that's a great sign to be taking a trade. And you say, if we had took that trade here and ran with it, we would have looked at exiting here on a short-term trade. So you can see where that trade is. But if we were going to go out onto a longer-term trade of 1 hour, you can see the same. I'll reverse back here. Sorry. So I'll take it out to 4 hours for you. Alright, so 4 hours here. You can see here again, if we would have gone for a 4 hour trade, this is where we were talking about here. Low points here, cross, red and the green cross to validate. We would have been taking our trade right here, around this period here, if we were around there, which would have been there, and then we would have been looking at exiting around here, or around this point here. Does that make sense? So, and if we had have exited here, and we actually could have traded for what's called short. So there's a long trade, which is a buy, and a sell, which is a short. So we can actually predict that we're going to sell a stock, and we say, okay, we're going to sell here, but then buy it back at this point here again, and make another profit. So to give you an example of that,
if we are here now and we think, okay, looking at the market, I probably wouldn't be trading at all. At the moment, I'd be holding out. But if I was going to do anything, I would think that this market's going to drop back to 23.5. So I do what's called a sell trade, which is called selling short. So when we sell short, we're buying at what's called market value, which is 23,768, which is up here. Or we can pick a price that we want to buy at. We say we want to wait till it gets to 23.8 or whatever, but generally use market price. Now again, if you've got any questions, please type them on there if I'm or anything like that. So if we're going to take it, I look at, for a profit gain, I want to usually gain around about 2.5%, and for a risk loss is 1. So that gives us a risk reward factor of 1%. So that means if this hits 24,000, which is not that far up there, then we would lose the trade. If it hits 21.83, we would make the profit. Now, my personal opinion is I keep an eye on it. That would be a great starting there. But I can here, using margin trading now, I can trade up to, on this account, $4,600. Obviously, that means that if I win the trade, $116 profit. If I lose $46. So there's obviously risk factors in doing that as well. So would I, for me personally, I'd be running shorter than that. I'd probably run a little bit more, probably around about the 1.25 there, and leave that at 2.5. So it gives us a risk reward of 2. So there is a risk that if that goes up above the 24,076, which is up sort of around about here, or then there's the we want to drop it around about the take profit at 23,193, which is about there, which is down if you look down at the last level of support there. So does that all make sense, guys? Is there any questions on that so far?
No, I don't have any questions.
Great, awesome. All right, so again, if we bring that down to a 1 minute period, and if we're looking at doing the same sort of trade, would we be doing that trade now on a 1 minute in the short term? Probably not, because on the short term 1 minute market here, we're looking at it's hitting bottom here, hitting bottom, hitting bottom. But as you can see here, we've got a 5 period, which is below the 200, which means we're actually trading or below the 100 mark here, and below the 200. Which actually means we're trading in a negative trade. So we wouldn't enter this trade at all. We'd be waiting for this. If we want to do scalping, we'd be waiting till this is back above, this red line is back above all these lines before we start trading again. So as you can see here, if I go back, you can see the orange line, which is the 200. You can see how this is a great trade. All the other lines are above the 200. But now you can see all the lines drop below the 200 right here. So when they drop below the 200, you can see the trend of the market is going down. So this is when you'll be looking at selling short compared to buying. So now that's on spot trading if you wanted to do that. If you want to do it on where we talked about future trading, this is where we get 20x to play with, and that's when the money becomes a little bit more scarier, but fun to play with. So if we're going to future trade, we can pick whatever futures we're going to do, and I'm going to pick Ethereum this time because it's going really, really nice. You can see the growth on these at the moment. This is just in the last 24 hours growth, so that's amazing numbers. And you're flat out getting 4% return on anything in a year at the moment, so let alone 24 hours. So having said that, if you had looked at it 2.5 weeks ago, it was 6% down, so so it can go the other way very quickly as well. So Ethereum, over the 1 minute period, so if we were looking at that trade, it's still looking reasonably good at the moment. We'd be watching for this to come up and connect with the green, this yellow line to connect here. It's undersold. It's actually, if these lines validate here, it's worth coming in for a trade at around this mark here. So we'd be keeping an eye on. Now we're actually using future trading, so we're fully leveraging it. It's using whatever I have in this account as collateral, and it will up to 20 exits. So say we want to put down 75% of what we do. We've got $7,600 we can use at the moment on that. that's just freed up. So it uses whatever you've got spare cash sitting in there and then multiplies it by it. So it doesn't take into whatever you've invested in spot trading. And so spot is for more long-term trading. Futures is for short-term gains. So again, if we're looking for so probably looking for shorter odds here of around about 2% gain. So it's $153 profit. And then let's have a look at what we've been prepared to. The bottom out there is about 1758 there. So if we want to come down to 1757, let's have a look. So 0.19. So I'd be quite happy to put that out to 1%. Sorry. $1%. So that gives us a loss of $75 or a risk of $152 if it hits $1,808. Now, if we look back here, it hasn't hit 18. It hit 1820. Just back at would be 7:55 a.m. This is set New York time, not in Brisbane time. So you can see at the moment it's 7:30, 30 or 7:35 or something US New York time at the moment. Again, the reason I keep it on this is because big things happen when the Dow Jones opens every single day at 9:30 in the morning, which is about 11:30 my time. And I'll give you an example of that as well. If we go to the 30-minute period, and we can look at where we go, 9:30. So you can see 9:30 there. That's exactly 9:30 in US time, and you can see straight away. I was going to point to the screen, but you can't see me pointing, so that doesn't work. You see down here, that collapsed straight away as soon as the market happened. Now, if we switch to, if I can get you on, just bear with me 2 seconds. I'm just going to bring something else across. If we look at the markets from this morning, you can see here the markets of the S&P 500 and the Nasdaq all crashed down here and then had a slow recovery. So if you look at the Nasdaq and they're down 0.12, 0.32, it reflects exactly the same as what happened in the market here, right on open. And we can see slight recovery starting to happen now. So I always look at the future trading for what's going to happen in the US as a really good guide, because whether we like it or not, the US controls the whole world economy at the moment. So it's really the guide we have for everything. So I'd be comfortable just keeping an eye on this trade. I wouldn't be taking the trade yet. So I need 3 validation points. I really need this RSI to be down here a bit more. I need these, sorry, actually we're on the wrong one. Sorry, 1 minute. I'll start again. So I need this RSI to stay around there. The MFI, money flow in. So it's underbought. We've got money not flowing in at the moment, but we're ready to start picking up. This yellow line here, which is the 12 periods, crossing over the 26 periods. And then the final validation is this red line crossing the green. And you can see we've already taken a dip down at the moment here. So if we had took it here with these 4 in a row, thinking, great, look, the market's going back up, we've been faked out, essentially, and saying, oh, wow, so now we're going to be in a down position here. So it's really important not to be emotional about your trades when you're doing it, because otherwise you could make wrong decisions very quickly. Like here's a great example, is we were going up nicely again. This all looks like a positive situation. If we had took a trade here and looked to go up further, we would have got caught out big time, but it didn't meet our criteria as well. Look at where the RSI is and the MFI is. It's way too high. So it's almost in an overbought stage. So now if we want to back out, and you can see what happened, it really stands out on a daily trade on Bitcoin as to what happened back in November when things started to go pear-shaped in the markets all around the world. And there's a really good correlation, as you'll see. These 2 little peaks here is when Bitcoin has peaked. They've always crashed, but you know what? They always come back again. The same as stock markets around the world. For the last 100 years, It's done exactly this all the time. It's a wealth distribution every single time. And what happens is we're in massive fear mode across the world at the moment with our economies. So everyone's selling and getting rid of stuff. But the smart investors are actually coming in and buying now because they know what's going to happen, that this will do the same thing again. Everyone's selling, everyone's freaking out. Boom, it goes up. And where does everyone start buying again? They start buying right in this period here when it's almost at greed. So what happens here is then all the big boys and the big traders and that go, all right, we're going to sell off. And then everyone starts panic selling, and they're selling short, so they're still making a profit all the way down here as well as the profit they made on what happened. And it's basically just a rinse-repeat cycle every 3 years. And stock market's probably about 5 to 7 years it does this. And you can quite easily see that just by Googling New York Stock Exchange or Dow Jones for the last 100 years. Literally does about 7 years of amazing growth, and then 1 to 2 years of 50 to 60% losses. It's almost like the biggest Ponzi scheme you can have in the world. So it's like everyone puts the money in, and then so all your mum and dad investors, all your single traders, all get absolutely smashed when that happens. They get really, really scared for the next 2 years, but then see all the exciting stuff happening again, and then try to reinvest again. And you can see we can see now starting to get a little bit of excitement in the market again. But for as far as graphs go, you can see exactly when this happened. So we've got November last year. It's peaking out. The world's getting so excited about Bitcoin, saying it's going to do 100 grand. It's going to be $1 million within 3 years. And, those people who've been trading a long time know that that's not going to happen. Why? Over the daily, it's oversold to crazy here. You can see here back in late October where everything's going crazy, it's oversold here. All these factors are just crazy. The amount of volume that's going through. And if you look here, again, our moving averages for a 5-day period, there, they cross down here, right there, right in the middle of November, is that first crossover of the 20 period. Then we get the next one of the 50 period. Then the 100. If you're not out by now, you're nuts. And you keep it. And if you still haven't got out by when it's hit the 200, well, quite frankly, you deserve to lose all your money because it's down at 43 now. But everyone's thinking, oh, it can't go any lower at 43. And of course, what happens here, it's hit the 200. Everyone goes, it can't go any lower than 43. So everyone's bought back in again, thinking it can't. And then bang, it's gone again, below that 200. And you can see that is when we're going to get the rise again, is when we see it hit this 100. And then as soon as it hits that 200 again, which is probably going to be around about that 29,000 period, that it'll start to peak off and go again. Again, that's just following the trends and numbers, and that's all you can really do when you're dealing with financials, because you can't take anything emotional in. And also, we don't know whether another pandemic's going to hit us like what happened the last 2 years. That wasn't great. The Ukraine war wasn't good for us. Russian, we've got the European winter coming up. With the lack of gas being put in there, what's that going to do to the markets? So there's a lot of factors got to play into it. But one thing about Bitcoin is it is an inflationary coin. The token itself actually thrives on inflation. So if you look at all the times it actually peaked, right back here, the first time inflation was higher. Inflation was quite low here, but in this period here was growing all the time. So it is really seen as a little bit of a safe haven for investors. So now I'm just going to take you through just a couple more things, and then I'll just open up for you guys to answer some questions, because I think we're getting into about 40 minutes into it. So I don't want to bombard you with too much stuff. So this is the basics. If you really want to get into more in depth, I'm happy to go more in depth another day with you guys, and we can really do some live trading online, and that's when it becomes really scary when you do it in front of other people, because they see your mistakes as well. So all right, so some of me personally, I only have a very small amount of money invested in Bitcoin. My big money has gone into Ethereum, also Solana, this coin here. Reason being is because they have great businesses backing them. Solana's got its whole blockchain network itself. You can see it was up around about the 240 at one stage, and we're sitting at 40 now. It is such a great product as well. And the other one, the big one for me, and this is the one I think is the most exciting one, is XRP. It's backed by a company named Ripple. which deals in cross-border transactions. Their Ripple network is huge, and Ripple as a business has taken off. But the reason why in the US at the moment they're not allowed to trade Ripple XRP because the SEC are in a court battle with them. The SEC are losing at the moment. If they lose, this token here will literally explode. There's no doubt about it. Because at the moment there are 330 million people who can't trade XRP, which is the biggest economy in the world. When they're allowed to trade again, can you imagine what's going to happen to this token? It's just going to go absolutely crazy. And it's also the second oldest token on the market. So from length of time, it's 2013. Sorry, it's the third. Sorry, so there was Bitcoin, Ethereum. There was a few others like Litecoin, which are still around, but really of the big ones, XRP was the next. And also its market cap was another thing. So that's the reason. And the other one I'm very bullish on for me is Matic, which is part of the Polygon network. This is a great token. It's heading towards, it has really, really boomed again. But its top out here was about close to the $3 mark back in November. So you can see getting back to there is not an unrealistic goal of $3. So you're 3xing whatever you're investing in there as well. So, and it's consistently performed over the last, well, the days easy from June to now. So that's less than a month. It's gone from 40 cents to around just under the dollar mark. So it's doubled its money, which you can't get 100% return on investment on anything in the world at the moment. So it's still a great market there. So on that, do we have any questions on trading while I got this up? And I'll give you a few other sites you can go to that can get some more of your own information from. So I don't know if you want to unmute for a second and ask any questions, and I'll do my best to answer them. It didn't used to be, but the longer it trades, the more it's becoming more mainstream. So it is linking more to the markets than it normally does. And I usually go, as I said, I usually have a look at what I just Google futures trading Dow Jones, and it'll tell you if it's in green. Usually means it's going to. I'll drop some links in to you guys when we get offline, so you can do, and also drop all the web pages that I think that are great information. Take them all with a grain of salt, because don't forget a lot of them have motives of what they want to achieve as well. So and that's where the fear of missing out comes into, and all that, because everyone thinks, oh, this token's going to go through. Shiba was a classic example. I don't. Some of you may have heard of Shiba. I did really awesome out of Shiba, but a lot of people stayed in it for a long time, and it crashed. And it's still not a bad token. It's still got a good future, but it's not going to be the dollar that everyone said it was going to be. It's just a meme. It's got no business backing behind it. And there are a few tokens like that, like Doge, which Elon Musk loves, and he tends to push it a lot himself. But they're just, at the moment, look, Doge was 0.07. If you look at its history, we go back to the week, you can see where it started. It's 75 cents down to 7 cents. I mean, that's massive drops. And if we look at SHIB was the other one. If you got in at the right time on Shiba, like here, you can see, but that all happened in the space of a few weeks. And you see from them, people held on too long. Even to this point where people were saying, yes, it's still going to hit $1, but this is at 0.00008 of a cent. For it to get to physically $1, it has 1 trillion tokens. It's mathematically not possible to do it unless they burn, and that's a whole nother video again about burning tokens and stuff like that. So, so there is a lot to learn there. But yeah, we should have seen the writing on the board. I took my profits probably about here, so I was a little bit late, but I still did really well out of it. But we should have learned. Taking profits along the way is a good thing to do. You just need to check on your capital gains side of your taxes and stuff like that. And if you're with, because the laws are obviously different in the US to Australia as well, Donna. Like if you keep your in Australia longer than 12 months, you get a 50% discount on your capital gains. So short selling is not always the best unless you're going to make decent money. But a profit is a profit at the end of the day. If you've got to pay, if you're paying $1 million a year tax, well, hey, that's a good year. So, but yeah, you want to really look at things that have got good business models behind it, and obviously your BTC and Ethereum are always going to be good buys because they're solid investments. Ethereum runs a whole network of coins. A lot of these tokens don't exist without Ethereum, and the same with Bitcoin. They all run what's called blockchains. There is some big stuff happening with Ethereum, which is another reason why Ethereum has taken a really good growth. You can see here the growth here. And it's actually overtook Bitcoin in volume per month, which is the first time in history it's done that. Is that they're actually merging what's called Ethereum 2 together in the middle of September. And there's another major thing happening in November, which is why I'm really bullish about XRP, is that all the cross-border transactions are going to move to a different, to cryptocurrency, to blockchain technology, because it's the most secure in the world as of November this year. So the banking system is going to be switching to blockchain technology, which XRP are a big factor. And then there's other tokens like XML, Argon. So have a look at ones that are looking for cross-border transactions and stuff like that. And the biggest one to Swift, would have heard of Swift for payment transfers. They're massive in the world. They're the biggest company that does it. So there's a huge marketplace for that, particularly with when Russia comes back on board and the African continent settles down a bit. So that's the kind of businesses I look for when I'm doing it. So yeah, so if there's any more questions, if not, I'll show you a couple of other little sites that are really good. Donna, do you have any questions? Are you still there? Or
Yes, I'm still here. Tell me the name of that company again. You said that you just did it. I didn't hear what the name of it.
XRP? Was that the one? Or Ripple?
You just said it like a couple seconds ago.
Oh,
You were saying like
Swift. Swift?
that's it.
Yeah.
Never heard of it.
Yeah. Swift is basically a cross payment. So if you're trying to transfer money from country to country, it's used probably the most readily. It controls about 80% of the world's market, and XRP is at about 3% at the moment. But they have some major moves into the Japanese banking systems, and they're just crazy. And in the UK and Europe, the Ripple and XRP is huge, and is probably the most used at the moment. So, because Swift have lost a bit of market share with Russia coming out of it at the moment, with the war, they've been black banned with a lot of stuff. But that war won't go on forever. It'll sort itself out somehow, I'd imagine, and once people start running out of money and somebody else has made enough money from it, it'll move on to the next big thing. There'll be another pandemic or something, monkeypox or whatever they want to do now. So, yeah. So this, as I said, XRP is just a great looking product for me. So it's I think it's something I'd be looking at, even just at 37 cents, grabbing 100 at 37, at $3.70 or whatever it is. How much was it? $37? I can't remember now. $37 for 100. If it goes to, they're talks of $1,000 on it are not out of the question, which puts you at obviously $3,700 return. So $37,000. Sorry. So yeah, but who knows? But I think I'm probably 60% of my portfolio is in XRP. That's how excited I am about it in the future, because I think at the very worst, even if they lose the battle with the SEC, it doesn't make any difference to the market, because they haven't got the US market at the moment. And there's 70,000 people in the US who've got frozen XRP accounts from the last 2 years, who have all put up a lawsuit against the SEC in the US. And the US lawmakers they're out of control at the moment. Really, I don't know what is going on in the US, but it's just nuts what's going on there at the moment. The way anyway, won't get into politics. So that'll put the video the wrong way. So all right, well I'll show you some of those sites I was talking about. New tab. Okay, so I will send you links to these, but this is one I use quite a lot, Crypto Panic. It's pretty, if I can type it right, Crypto Panic. It's pretty much, what it does is it brings all of the news for cryptocurrency all into one feed. So you can pretty much get things up to date within a minute of things happening. So you'll know, but as I said, take everything with the grain of salt when you're reading these, because they're all depending on where it's coming from, they're all pushing their own agenda. But it's a great place to learn about it. And speaking of, the other one was this one here. I would be looking at XRP News. This is a great site as well, which is news.co.uk, and it's got all the crypto coins down here, the latest news from each one of them, depending on what you're interested in looking at. Each one of the exchanges, about what's happening with them. You can learn a bit about non-fungible tokens, which I'd recommend you do learn a little bit about, because it certainly is a future, and that's where you can start learning maybe about the metaverse. And there's a big future in Web3 and metaverse, which is another 2-hour video by itself as well. So I won't go into that. But you'll see all the information on Ripple, the Ripple company here, about what's happening. How Ripple XRP went from top Ethereum challenger. So you'll see some are positive ones, some are negative, because it depends on which angle they're coming from. But it's just great to get all the information. Obviously, go to their own the Ripple website, or to whichever one you want, or Bitcoin. So ripple.com, and it will give you an idea exactly what's going on in their environment, and it's quite huge of who they're dealing with. The Bank of America, you can see all the list of people that they're doing. The crypto ledger itself is just huge, so the XRP ledger. What else would, if I have a look at what I've got in my little crypto metaverse, just trying to think if there's anything else here I'm worth sharing with you. Some free trading tools there. There's a wealth of information on YouTube as well, but again, take it with a grain of salt. But this will give you an example, just a little bit about different patterns on candlesticks, what they mean. So you can go through and read a bit about that. You can get some more information on forex trading. Little calculators are involved there. YouTube is a great, obviously, a great place to get information from, depending on what you're interested in. Whether it be on trading or a bit on XRP. But again, just be aware of the hype. Is like this guy, every day, this guy says, XRP is going to be massive today, but it doesn't change that much during the day. Or there'll be another one saying Shiba through the roof. Breaking news, Shiba's ready to pump. I mean, this guy's been saying this for the last year. So anyway, it'll give you a bit of an idea of what's out there. But I just didn't like this one because it keeps you up to date all the time with what's going on. You can read it, take it with a grain of salt. It's from all over the world. So we've got a Australian crypto base, talks about crypto mining, which is going to be more and more of a possibility for you and I. My machine here, I can mine with at the moment. It used to get me about $70 or $80 a month for nothing. But with obviously prices going down in Bitcoin and price of electricity going up, not quite as effective. So I think, guys, that's at the moment. I think that's all I have for you. I hope you've got something out of that. I hope that's been interesting. And if there's any further questions you want, whilst you got me, and I think I set today for an hour, and I think we're at 4 minutes to go, so I think I did pretty well. So yeah. Oh, good. Oh, glad. Let everyone know. It's really hard to get people excited about stuff sometimes. So, but. I hear you. I don't blame you. So, and yeah, it is the great thing about it is when we were talking about before about trading, you don't have to be trading, even if you want to do future trading, just put $20 in for a bit of fun, and it's probably no different to going down the pokies for 3 or 4 hours for $20, except you've got a chance of making some money here. Is you can just go and just go, well, I'm going to put $100, but you're only actually, because you're leveraging it, you're only actually spending $10 of your money to do it. Or for 20, you can actually get up to $400 leverage. But it will give you your liquidation will be a lot higher. So but for $100 you can say, well, okay, I'm going to practice, and I'm going to put a take profit of 23,950. 100 BTC. That would have been nice, wouldn't it? $2.3 million. There we go. So 0.041. It's only going to make 56 cents. But you practice your stop losses and get. I've lost on it. So 23.5 for your stop loss if you want it. Or practice your using your 1 and your 2.5 is a really good way. That's a really good risk to reward calculator, 2.5%. You only. Yep. Yep. Yes, there's plenty of exchanges. Not on FTX, but there is on OKEx and Qcoin. There's another one. They have them, and they'll allow you to use it like this. But you can, if I get on here, I don't have any. Just let me have a look for you. Yep. No, that's all right. Well, I'll just show you. So on this one, you do have some trades you can do in the euro, Canadian dollar. That's just the Canadian dollar itself, I think. Oh no, Canadian dollar. No, that's the Canadian dollar versus US dollar there. So it doesn't have them all. But yes, definitely, if you're interested in doing that, it's still, the concept's still exactly the same. Except the beauty of it is it does close. Whereas cryptocurrency, or the beauty of cryptocurrency is it keeps going all the time, 24 hours a day. Whereas every other market's shut. Now that's good and bad, because the bad thing is about it, you go to sleep and wake up the next morning and the whole world's changed. Whereas at least you know when you go to bed here, nothing else is happening while you're asleep. So, and I can assure you that's caused me a lot of sleepless nights. So, and you'll see on here, if I go 5 minute, it's a lot less used, I suppose. So you'd have to go to probably a dedicated Forex site, but the concepts are still exactly the same. And there's plenty of that offer demo accounts to do it. But yeah. But if you look at the Canadian dollar versus US dollar, all the theories still work the same here. The crossover here. Like I don't do any of this, but you see the volume's very low on FTX because most people don't use it for Forex trading. But I've used it in Forex before, and it works exceptionally well. As long as, again, when it doesn't work for me is when I break away from that formula a little bit. And then I go with my gut feeling rather than on my emotions. And I get excited about something, or I get scared about something. That's when it fails. And then you go, idiot, why did I do that? You stick by the formula, and 60-70% of the time it works. 30% of the time it doesn't work, and that's still a pretty good win or loss ratio in anyone's language. And yeah, so. But yeah, more than happy to go through anything you guys want at another time if you want to go through. So I love going through this stuff myself. I enjoy it. It's my passion outside of my business. So if there's nothing else, we'll wrap it up there. Thanks for coming in, Robin. Thanks, Donna. I hope you enjoyed it, and I will chat to you guys later. All right, take care. Bye.